We are in the class, huh?
Oh.
And we are live.
Okay. Live.
So December 2024. December 2024. That is question number. So the question we will be discussing is December 2024, question number 4. Question number 4. December 2024, question number 4 will be our question for discussion. It will be our question for discussion, cash flow statement. And let us go through the question. We can go through the question and see what the examiner is telling us, and then analyze and do the question. So this is what we are told. We are told that the following are the consolidated. The following are the consolidated financial statements of Love Group for the year ended 30th September. You are given the consolidated statement of financial position as at 30th September 2024 and 30th September 2023. For the statement of financial position, we said that you are going to be given what? The comparative. You are given the current and the previous year. Then you do what? You explain the change. We are given an current asset, so we need to explain the change, the difference between the property, plant, and equipment, goodwill, investment in associate. Current assets, we have inventory, account receivable, cash and cash equivalent. Then ordinary share capital, we have to explain the change. Like in this case, I can see they have increased. So we need to explain that increment. Together with the share premium, revaluation reserve also has increased. Retained earnings, equity attributable to the owners, and non-controlling what? Interest. Then we have the statement of profit or loss, whereby we are given the revenue, cost of sale, gross profit, operating expense, of profit from operation, gain on disposal of subsidiary. Then we have the finance cost, share of profit of associate, profit before tax. Then we have the income tax expense, profit for the year, other comprehensive income. We have gain on the valuation of property, then total comprehensive income. Profit, we have attributable to the owners or the group owners, and also the non-controlling interest. Then we have the total comprehensive income for the year, attributable to the group owners, and also attributable to the non-controlling interest. That is what you are given. Then additional information, this is what you are told. Number 1, depreciation of shillings at 2,400 million was charged during the year ended 30th September 2024. And anytime the examiner is talking about the depreciation in this case, anytime the examiner is talking about the depreciation, it means that we need to adjust what? Our property, plant, and what? And equipment. So straight away, because we need to use as shortest time as possible. We open the property, plant, and the equipment what? Account. So let us have the property, plant, and what? And equipment account. So we explain the change. So this is what we are given. You can see that we are not given the breakdown, and anytime we are not given the breakdown, therefore we open the property, plant, and equipment account at what? At the net book value. We open it at the net book value. So give me the balance brought down. Balance brought down, we are given how much?
10,150.
10,150, and then we have the balance carried down. The balance carried down, how much are we given?
15,900.
15,900. Then we have the depreciation. We have been given the depreciation of how much?
Depreciation of 2,400.
The depreciation of 2,400. Our shillings are given in millions. Our shillings are given in million in this case. Then from there, they continue to tell us that a plant with a carrying amount of 1560 million was sold for shillings what? 1720 million. So therefore also we have the disposal. So we have the disposal of what? Disposal of plant of how much?
Disposal of 1560.
Yeah, the carrying amount, 1560. Therefore, that means also we need to open the disposal what? Disposal account of what? Of this plant. And this disposal account, we have the carrying amount of how much? Carrying amount, we are given carrying amount of how much?
1560.
Of 1560. Then from there, they continue to tell us was sold for. So we have the cash proceeds. Cash proceeds of how much? Cash proceeds of
1720.
1720. We have the cash proceeds of 1720. Then from there, the gain on disposal was recognized in operating cost. So we have the gain on disposal. So we have the gain on disposal. Let us see whether it is a gain on disposal. Yes, this is what we have, and this is what we have. So 1720. Here we have 1720. Therefore, we have a gain on disposal of how much?
160.
The gain on disposal of 100 and what? 160. 160. So this 160 is going to affect what? Is going to affect our adjustment. Our adjustment. Then from there, you are told that our property was revalued during the year, resulting in revaluation gain of how much? Of 1,400. So therefore, we had the revaluation. We had the revaluation. We had the revaluation what?
Gain.
Yeah, revaluation gain. Revaluation gain of how much?
1,400.
Of 1,400. We have revaluation gain of 1,400. So therefore, from there, I think all the information provided in the additional information number 1, we have adjusted it, meaning that this depreciation here will go to what? To the adjustment. Then from there, we have this cash proceeds on disposal of plant will go to the investment, and also this gain on disposal will go to the adjustments under what? Under operating activities what? Cash flows. Then from there, we go to information number 2. Information number 2, you are told that during the year ended 30th September 2024, Ndov Limited acquired 75% of the ordinary share capital of Simba Limited, paying a cash consideration of shillings 9,400. Then from there, they continue to tell us that the non-controlling interest was measured at fair value of shillings 21.25 million at the date of what? At the date of acquisition. So therefore, we had acquired this company known as what? Ndov Limited. So let us get the goodwill on acquisition. Goodwill on acquisition of what? Of Ndov Roger. We are told that during the year, Ndovu Limited acquired Simba, not Ndovu, but Simba Limited, goodwill on acquisition of Simba Limited. So this Simba Limited, give me the purchase consideration.
20.
Purchase consideration was how much?
9,400.
Purchase consideration we are given 24?
9,400.
9,400, 9,400. Then we had the non-controlling interest. Non-controlling interest fair value was how much? Non-controlling interest
25.
fair value was 21, 25. Total, how much are you getting? Take this plus this. Tell me how much you are arriving at. Yes?
11,525.
11,525. Then from there, we less what?
Net assets.
We less the net assets acquired. Net asset acquired of how much? The net asset acquired, we are given, we are told that the fair value of Simba Limited net asset at acquisition was made up of the following, and the total is how much?
93.15.
93.15. 93.15. And then we are going to get the goodwill of how much? The goodwill of the difference. 2210. We have the goodwill of 2210, and we don't know whether that was impaired. I don't know whether that was impaired. We will know later. Then note number 3, we are told that during the year ended 30th September 2024, Ndovu Limited also disposed of its entire 80% ordinary shareholding of Kifaru Limited for a cash proceeds of shillings what? 5,300 million. The subsidiary was not considered as a separate unit of operation. Kifaru Limited had acquired several years ago for a cash consideration of 3750 million. The NCI of 20% was measured at its fair value of 2,000 million at acquisition, and the fair value of Kifaru Limited net asset was how much? Was this amount. So we had disposed Kifaru. So let us get the goodwill. Goodwill on acquisition. We get the goodwill on acquisition of what? Kifaru Limited. Goodwill on acquisition of Kifaru Limited. And this one, how much do we have? So give me the purchase consideration. Purchase consideration, we are given how much? Purchase consideration of Kifaru.
5,300.
5,300 is cash proceeds, the one that we paid several years ago at a cash consideration. 3750. Then the non-controlling interest. Non-controlling interest fair value was how much? Fair value,
2,000.
we are given 2,000. And then how much are you getting? 5750. And then give me the net assets. Net assets at what? Acquisition. Net asset at acquisition was how much?
Net asset at acquisition.
We are told that the non-controlling interest of 20% was measured at its fair value of shillings what? 2,000 million at acquisition, and the fair value of Kifaru Limited net asset was
4,600.
4,600. Then from there, we get what?
Goodwill.
Goodwill on acquisition. Goodwill on acquisition of how much?
Getting 1150.
We are getting an amount of 1150. We have a goodwill on acquisition of 1150. And all of this information help us to open the goodwill account now. So therefore, let us open the goodwill account. So goodwill account. We open the T account of the goodwill. So give me the balance brought down. How much?
Goodwill has got a balance of 11,560.
11,560, and then the balance carried down is how much?
12,060.
We had 12,060.
60.
12,060. Then from there we had what? Disposal. Disposal, we disposed how much? We disposed this kifaru, isn't it? The kifaru that we disposed had how much? Goodwill, 11 what? 1150. And also we acquired
Simba.
We acquired this company, goodwill of how much?
Simba.
2210. Then from there, do we have any other information? Any other information that is available?
Not yet.
We don't have any other information available. Therefore, which side is more? Which side is more?
The side which is more is on the
Compare exactly. Which side is more?
The credit side.
The credit side is more.
11,560 plus 2210, 13,770, 12,60, 11,50. The debit side is more.
How much?
13,770.
13,770. And this one?
That's it, same.
Yes?
It is same.
Same how? What do you mean?
Even 13 to 10.
13,770. Then get the difference. The difference will give us what?
560.
The impairment. So we have impairment of how much?
560.
Impairment of 500 and what?
60.
And 60. So this impairment will go to the adjustments. So we are done with that one. Then we go to the next one. The next one is which one? The next one, we go to the next one. The next one we have in the investment in what? Associate. Investment in associate. Let us open investment in associate account. Balance brought down is how much?
Associate.
Mm-hmm.
So we have balance brought down is 3375.
3375. Balance carried down.
Carried down is 3875.
3875. Then from there, did we acquire any subsidiary? Give me the profit. Profit share. Profit share was how much? Go to the income statement. Do we have a profit share of the associate? Yes, we have it. How much can you see after the finance cost?
We have the 720.
Yeah, 720. Then let us get the dividend what? Dividend received. How much did we receive as dividends? So give me the dividend received. So just accumulate. When you accumulate, how much are you getting? Accumulate very fast, very fast. Give me the figures. Give me the figures when you add here. How much?
4095.
4095. 4095. Then the difference. The difference of how much?
220.
Yeah, the difference of 200 and what? And 20. Those are the dividends received. And we'll go straight away to what? To the investing activities what? Cash flows. Then from there, we have done that. Then once we have done that, we go to the equity. Equity, did we acquire any company through share for share?
No.
The company that we acquired recently, we just acquired it through cash. So therefore, that one we can explain using what? Using narration. Using narration, meaning at the beginning it was how much?
So wait, 8,000.
Uh-huh.
And then
so we explain using narration. So ordinary share what? Share capital. So at the beginning was how much?
8,000.
8,000. At the end we had how much?
10,000.
We had 10,000. So therefore the difference of how much? They have increased by how much?
2,000.
By 2,000. Then from there we go to the share what? Share premium. Remember they go hand in hand. So share premium at the beginning was how much?
1200.
1200 at the end.
1500.
1500 increment of how much?
300.
Of 300. Therefore, we have the cash received. Cash received. Cash received from what? From issue of how much? When you add, it is 23 what?
Yeah.
2300. That is well explained. Then from there, we go to the next one. The next one is which one?
Retained earnings.
The next one is a revaluation. Before we go to the retained earnings, we have revaluation. So we can just open the revaluation surplus what? Account. Revaluation surplus account. In most cases, there is nothing to explain here because our balance brought down was how much? Give me the balance brought down.
3280.
3280. Our balance carried down.
4680.
4680. Then we had the revaluation gain. Revaluation gain of how much? Gain, the gain that we have here of 1400. 1400. Then from there, when you accumulate, how much are you getting? When you accumulate, are you getting the same 4680?
Yes.
4680. Yes, in most cases under evaluation, there is nothing to do what? To explain. Then that is what we are supposed to do in that account. Yes?
Where does the revaluation go?
Property, plant and equipment. Yes. Then from there, we go to the next account. The next account will be retained earnings. So we go to the retained earnings. So let us open the retained earnings what? Retained earnings account. So for the retained earnings account, what do we have? Retained earnings account. Give me the balance brought down. How much is the balance brought down?
6780.
6780. Then we have the balance carried down. How much?
1090.
We have 1090. Then we have income statement. Income statement, we have how much? How much we have as income statement?
Profit.
Yeah, profit attributable to owners.
That is 4690.
We have how much? 4690.
90.
Yeah, 4690. Then from there, let us see whether in 1090.
10090. 10090.
10090 or 10,090. Yes, so therefore get the total and we see how much we paid as dividend. How much? Get the total very fast so that we see how much.
Is 11 for 70.
11 for 70. 11 for 70. Therefore, how much did we pay as dividend? Dividend paid?
The dividend is 1380.
Dividend paid of how much?
1380.
1380. We paid a dividend of 1380. Then from there, we go to the next one. The next one is non-controlling what?
Interest.
Non-controlling interest. So for the non-controlling interest, this is what we have. Give me the balance brought down. The balance brought down was how much?
The balance brought down is 2000.
We had 2000. Then we had the balance carried down.
1940.
1940. Then income statement, we had how much?
We have income statement. 6,600.
We had 600, isn't it? Then we acquired the Simba Limited, isn't it? Yeah, Simba Limited, how much? So take the net assets. The net assets were how much? Multiplied by the percentage, the share. We acquired
Simba.
Yeah, 75% went to the parent, meaning the difference of 25%. And they had the net asset of 93. This one, 9315. So you are going to take this 9315, you multiply by 25%. So give me the figure. 25% of that.
Yes.
These net assets.
93%.
So how much are you getting? How much are you getting?
2328.75.
Yes?
2328.75.
2328.75. And then from there also we disposed what? We disposed this company known as what?
We disposed Kifaru.
We disposed Kifaru. Kifaru. Give me the figure. The figure of Kifaru will be how much?
We disposed
the figure of Kifaru. How much? At disposal date, the last information.
6100.
You are told that at the disposal date, the net assets were what? 6100. And we had acquired this company had an NCI of what? 20%. So 20% of 6100 is how much? 20% of 6100.
1220.
Yes?
1220.
1220. And then from there, how much? How much are we talking about?
NCI.
Yeah, NCI will be how much? Give me the NCI.
This is 23, 24, 28.75. 49.
49.
28.75.
Yes.
49. 28.75. Ngoja. Hiyo ni 1220.
Yes.
Sio 1220.
Yeah, it is 1220.
So you're balancing, huh?
Yeah, we were balancing. Yeah?
So the balancing figure is 49.28.75.
49?
49.28.75.
The balancing figure? Or the total?
So
49.28.75. 49.28.75, isn't it?
So the balancing figure is 1768.75.
1768.75. 1768.75. Then from there, we go to what else?
So what is the 1700? Is it any dividends?
Just a minute. When did we acquire this company? The company which was acquired.
The company was acquired.
This company which we acquired.
September 2024.
We acquired it on September 2024.
During the year, this one, also, it was disposed. That is when it was disposed.
Oh, that is when it was disposed.
No, Simba was acquired during the year ended September 2024. And now we are preparing the books at the same year.
That was it was disposed on. I'm not talking about the disposal.
It was acquired on the
I'm talking about
acquisition.
the acquisition. Yeah, because we acquired and we disposed.
Not true. During the year ended 30th September 2024, Dovu Limited acquired 75% of ordinary share capital of Simba Limited. So it was also acquired during the year, the end of that financial year.
During the end of that financial year, that is when it was
acquired.
It was acquired. Then there is this one which was disposed. Income statement, for the income statement is okay. Then from there, we acquired this company. Ilikuwa wapi? Kuna kampuni tuliacquire. Ilikuwa na net assets zanga. Kuna kampuni tulidispose hata si kuacquire.
Yes, Kifaru.
It was Kifaru.
Note 3, during the year ended 30th September 2024, Ndovu Limited also disposed of its entire 80% ordinary shareholders of Kifaru Limited for the cash proceeds of 5,300. The subsidiary was not considered as separate.
For the cash proceeds of how much?
5,300.
And the subsidiary was
Simba.
Kifaru. Let us look at that information again. We see how we can interpret it. I think we have not interpreted it correctly. So therefore, let us look at it again. Let us look at it again between these two companies that we acquired and these totals. So we can explain afresh. So this is what we have. This is what we have. Give me the balance brought down. The balance brought down was how much?
2,000.
2,000. Then we had the balance carried down of how much?
1940.
1940. Then from there, income statement was how much?
600.
600. And then from there, this is what we are told. During the year ended at 1st September 2024, Ndovu Limited acquired this. The non-controlling interest that, then from there, the fair values of these net assets was made up as follows. So we are given that, and they are silent. Therefore, if they are silent, we assume that it was done what? It was included. We assume it was included in the statement of financial position. Sorry, for the profit for the year. Let us hear what they say for C. During the year, number 3, during the year ended 30th September 2024, Ndovu Limited also disposed of its entire 80% ordinary shareholding in Kifaru Limited for cash. This subsidiary was not considered as a separate what? Unit of operation. Kifaru Limited had been acquired several years ago for consideration of this. The NCI, the non-controlling interest of this 20%, was measured at its fair value of shillings 2,000 million at acquisition, and the fair values of Kifaru Limited net assets were shillings what? 46 million at that date. Goodwill had not suffered any impairment. At the disposal date, the net assets of Kifaru Limited were carried in the consolidated statement of financial position as follows. So in this case, this we assume for this one at acquisition, it was considered for us to arrive at what? This income statement. So let us see for the disposal. For the disposal, itakuwa namna gani? We normally take what? We normally take the net what? We normally talk about the net. Net. We talk about the change. Let us get the change. The change will be how much? How do we get the change? At acquisition, the net assets were how much? Let us start at acquisition, and then we take our share of 20%. At acquisition, how much was it?
4,600.
At acquisition, it was 4,600. At disposal?
At disposal?
At disposal?
6,100.
At disposal, it was 6,100. 6,100. Therefore, it has a difference of how much? The change. The change is how much?
6,600 minus
6,100.
1,500.
1,500. Then you multiply by 20%. So disposal itakuwa ni ngapi?
Negative 300.
Disposal, not negative. we are looking at the change.
Yeah,
the change. So it will be 300. Then from there, let us evaluate whether we have a dividend paid or not. Do we have dividend paid?
Yes.
Dividend paid ama hakuna? So inakuja ngapi? 2600. 2600. How much was paid as dividend?
600 minus 1940 minus 300. 360.
So you paid a dividend of 360. We paid a dividend of 300 and what? 360. So that's about the non-controlling interest. Once we have evaluated the non-controlling interest, the next thing is what? The next thing will be?
Presenting.
The next thing. I'm still thinking about this NCI. NCI at acquisition was how much? Ilikuwa 21.25. Then from there, at disposal, do we have it at disposal? At disposal ilikuwa ni ngapi NCI?
6100.
6100 ilikuwa at disposal.
So unasema hapo at the date of disposal the net assets of Kifaru carried out to the consolidated statement of financial position as follows. The total is 6100.
The total is because that is our balance brought down. Then we have income statement. Then from there we have talked about the whatever that we disposed, the net assets which we disposed. Then from there, what else? What else? What else? What else? Other than that, because we have this acquisition, kuna hii tuliacquire non-controlling interest of how much? 21.25, isn't it? Then from there, hii tumeacquire during the year, isn't it?
21. During the year ended 30th September.
Our year is ending when?
The same year.
It's not ending on 30th September.
It is ending on the 30th September.
Yes, so therefore, whatever that we acquired, so that one, so we have non-controlling interest, their value of this one, 21. And then from there, what else? We have the share of profit, that is okay. Then we had disposed the subsidiary. The subsidiary which we had disposed. So then from there, so 2000 plus 600, then plus 21, 25. Mhm. Then minus what? 19, 40. Then minus 100. 300. I think we have not adjusted this account correctly. Yeah. Because we had acquired. Give me the whatever that we acquired. Yeah. NCI, yeah, Simba Limited. Simba Limited. How much was it? It was 21. Huh? 21.
25.
Yeah. This account, we have not adjusted it correctly. So this is what we have. This is what we have. So we can start afresh, no problem. So let us have the non-controlling interest, non-controlling interest, non-controlling interest. Then from this non-controlling interest, balance brought down was how much?
2000.
2000. Then we had the balance carried down.
1940.
1940. Then income statement, 600. Then Simba Limited. Simba Limited of how much?
2125.
2125. Then from there we had disposed what? Kifaru. Kifaru Limited, we had disposed how much? The NCI that we disposed, this one, the fair value was how much? The fair value was 2000. And also we had disposed the net what? Net assets of how much? Of it was 6100 minus what? 4600. Then you multiply by 20%, which were giving us how much?
300.
300. And then in that case, give me the dividends. Dividend paid. How much were paid as dividend? I think in that case, we would have incorporated everything. So therefore, it is going to be how much? 2000 plus what? 600 plus 21, 25. We will get 47.
4725.
Yeah, 4725. We have 4725. Therefore, the dividend paid is how much? Dividend paid, the difference. The difference is minus 1940 minus 2000 minus what? 300. We are getting how much?
Plus 1940. 4725 minus 1940 minus 300 minus 2000. 485.
We are getting an amount of 485. Then this will be the dividend paid to the non-controlling interest. And I think we are done with equity. Then we move to the next one. The next one is, yes, use the phone.
So the next one is
You have no option but to go for the soft copy. So you go for the soft copy.
That is page chapter 2024 December.
Yes.
We are in 2025 April.
Yes. So give me how much?
From question 4.
So we were in non-controlling interest.
So
from non-controlling interest, the next item below there,
bank loans.
Bank loans. Increase or decrease?
Increase.
The bank loan decreased.
Increased.
Increased.
From 1875 to 2500.
Let me see. Bank loan iko wapi?
On current liabilities.
And current liability.
So those are narration.
Yeah. So therefore, bank loan. We talk about bank loans. Bank loan changed from how much?
The bank loan changed from 1875.
1875 to what?
To
1875
to 2500.
To 2500, meaning there is a
increase.
Yeah, cash received. Cash
625.
received from what? From issue of bank what?
Bank loan.
Bank loan of how much? The difference?
625.
625. What else? The next item is?
The next item is deferred tax.
The next item we have is deferred what?
Deferred tax.
Or deferred tax. So we open the income what? Income tax account. So let us have the income tax account. This is the balance brought down. We have the current, we have deferred and current. Then balance carried down, deferred and what? And current. Give me the deferred.
So the
deferred was how much?
Deferred was 650. Balance brought down.
650. Carried down.
Carried down was 940. 940.
Current.
Current tax 2485.
2485.
2530.
2530. Income statement.
Income statement. Current tax. Income tax expense. 1400.
We had 1400. Then from there, give me disposal. Did we dispose any tax? Go to note number 3.
Yes.
Did we dispose any tax?
Current tax.
How much?
250.
250. 250. Did we acquire any tax?
Number
acquisition. Number 2.
Number 2. Acquisition we acquired 250.
Now number 3, did we dispose? We never disposed. So therefore you have given me wrong information. There is no disposal. So we have what?
250.
Acquisition. Acquisition of how much?
250.
250. We never disposed. Then from there, anything else? I think there is nothing else. So therefore, give me the tax paid. Tax paid. Tax paid will be how much? Tax paid. Just accumulate. So we see whether there was tax paid.
The total is 47.
47.
85.
85. 47. 85.
Tax paid was 1315.
1315. That was the tax paid. So therefore, the account which we are yet to close is this one. Property, plant, and equipment. So let us close that account. Go to the acquisition. There was acquisition. We acquired which company? Simba Limited. We acquired how much? Property, plant, and equipment. How much did we acquire? 8,000.
8,000.
Then from there we disposed which company? Kifaru. Kifaru Limited, we disposed how much?
43.50.
45,
45.30, sorry.
45.30. Then from there, anything else? I think there is nothing. Now balance, balance this account so that we can present our cash flow. Balance the account so that we can present what? The cash flow. Balance the account so that we can present cash flow. Balance.
So balancing.
Yes, balance very fast.
Earlier, 2400. It's 1516 plus 4530 plus 15900. 24,390.
The total. Which size? This one. 24,390.
Unit 10 150.
24,390. Yeah, 10,150. And therefore give me the acquisition.
Minus 24.
Acquisition of how much?
Acquisition of 4840.
4840. Acquisition of 4840. Acquisition of 4840. So that is what we have. That is what we have. So from there, we go to the next one. The next one that is remaining is for us to present. What is remaining is for us to present, which will take us how many minutes do you think to present?
10.
To present can take us 10 minutes. You can see that.
So acquisition equal financing. Investing.
Acquisition is investing. Yeah?
Investing.
Yes. So can I rub so that we can present now?
Yes, yes.
We can present the cash flow. Yes, so we move. Hope you have all the information needed that will help us. All the information needed to help us in this thing. All the information available, which is going to help us to bring this thing down. All the information that can help us to bring this thing down. And give me the name of the group. So it is Novo. Novo Group.
Consolidated.
Consolidated cash flow.
Statement of cash flow.
Cash flow statement for the year ended. For the year ended when?
30th September.
30th September 2024. This is what we have. This is what is available. Yes. Our shillings were in what? In million. Then from there we start with operating. Operating activities what? Activities cash flows. Operating activities cash flows. Give me the information which is available.
Profit before.
Profit before tax. And sometimes it can be a loss. Profit before tax of how much?
Profit before tax of profit before tax. This is a 6690.
6690. Then we have adjustments. Adjustments. The first one we talked about depreciation. Give me the depreciation. Depreciation examiner had given us, so it was just copy pasting. How much?
2400.
2400. Then from there we had what else? Impairment. Impairment was how much? Impairment of goodwill. It is there. Is it 560? Then we had finance cost. Give me the finance cost. It is here.
Oh,
yes. Then give me the finance cost. How much did we have as a finance cost?
Finance cost 220.
220. 220. If we had amortization, we should have put it if we had the loss on disposal. But we had what? Gain on disposal. Gain. We had gain on disposal. Gain on disposal of what?
150.
Of plant. Of how much?
150.
Where is it?
For your plant.
Yes.
Chapanguza.
The plant account.
The disposal of plant account.
How much was it?
150.
150. 150. Then from there, what else? Give me the profit.
So when it's again, we minus.
Yeah, minus. Give me a profit. Profit share of associate. Profit share of associate was how much?
Profit share of associate.
It is here, 720. Are you seeing 720? Then from there, what else do we have? Do we have anything else that will affect this? If there isn't, give me the total up to there. When you add up to that point, how much are you getting?
Profit share of associate.
When you add up to that point, how much are you getting?
On that profit share of associate. 720, I can see it on this account. To calculate how it go direct you. To balance now.
Profit share. It was from the income statement. From the income statement.
I'm not seeing the 720.
After the finance cost. Below the finance cost.
Yeah, I can see it.
Then from there, also we disposed a subsidiary. Give me disposal. Disposal of subsidiary was how much? Disposal of subsidiary. We disposed that again. How much was it? Gain on disposal of subsidiary. How much? We were told, yeah?
The subsidiary was not considered as a separate unit. The proceeds were 5,300.
When you go to the income statement, are you there in the income statement? Gain on disposal of subsidiary, how much are we given?
We have 350.
We had 300 and what? 350. Now give me the total so that we can look at the working capital changes. Working capital changes. We want to look at the working capital changes. So how much are you getting?
6690.
We have 6690. 6690
plus 2400.
2400 plus what? 560 plus 220 plus
minus 150 minus 720 minus 350. Okay, 650.
So you are getting how much?
8650.
8650. Then from there, let us start with inventory. Give me inventory. Inventory at the beginning was how much?
Inventory at the beginning was 2780.
Was 2780. So 2780. 2780. Then we acquired inventory of how much?
We acquired 940.
940. Then we disposed how much?
We disposed 1030.
1030. What do we have at the end?
At the end we have how much it is? We have 2970.
2970. Therefore, increase or decrease?
2780.
So we have 2780. We add 940. Then we rest 1030. So we have 2690, meaning it has done what? Increased, not decreased. Huh? It has increased. By how much? Minus 29, 70. So we are getting 200 and what? And 80. Then we go to the next one. The next one is trade receivables. Give me account receivables. Account receivables.
We have 2060.
Account receivables at the beginning we have how much?
2060.
2060 plus, did we acquire receivables? Yes, we acquired 1500. Then did we dispose? Yes, we disposed how much? 750. At the end we had how much? At the end we are given 24? 2440. So therefore, how much are you getting? So 2060, then plus 1500, then minus 750. Then from there, in that case, they have decreased. Yeah, they have decreased. And if they have decreased, our customers are doing what?
Paying.
They are paying. How much? 370. Then we go to the accounts what?
Payables.
Accounts payables. So the accounts payables, what do we have?
Account payables we have. We have
Account payables.
4530.
4530 plus
Plus payables we have
1375.
1375.
Then minus disposal 510. At the end, how much do we have?
At the end, we have account payables. We have 4375.
4375. So increase or decrease? 4530 plus 1375 minus 510. Then from there is a decrease.
A decrease. Yes,
a decrease of how much?
4375.
So also we are paying what?
1020.
We are paying our debt. Then from there we will get what? Gross operating what?
Cash flows.
Cash flows. Gross operating cash flows.
Of 8650 minus 280 plus 37.
So how did you arrive at this 150?
Which 150?
I'm concerned with how you arrived at this figure.
Gain on disposal.
Yes.
Where?
Go to the account that we opened. The account that we opened on the board.
It was 150, yes.
How did you arrive at it?
Still balance.
It was balancing by how much?
150.
Yeah, you gave me a wrong figure. Can you subtract again?
1720 minus 1560. 160.
Yes, you gave me a wrong figure. So this is supposed to be what? 160, not 150. Yes, so therefore, it is going to reduce by 10. So this will be 8640. Yeah, 8640. Now give me the gross operating cash flow. The gross operating cash flow will be how much?
150.
So it is 8640 minus 280 plus 370, then minus 1020. Therefore, we are having 7710. Isn't it? 7710. Then from there we have tax paid. Give me the tax paid. How much did we get there? 13.
Tax paid 1315.
1315, and also we have the interest paid. We got how much as the interest paid?
220.
It is 220. Then from there we are going to get what? The net operating what? Operating cash flow of how much? Net operating cash flow minus 1315 minus 220. So we have 6175. We have 6175. So once we have that, now we go to the next one.
Investing activities.
And the next one is investing what?
Activities, cash flows.
Now we have investing activities what? Activities cash flows. And under investing activities cash flows, what do we have? Investing activities cash flows.
We have Supercollider acquisition.
So we had the dividend. We start with the dividend received from associate. How much did we receive from associate? Go to the associate account. The associate account. Give me the dividend which were received. How much?
220.
The account that we opened.
220.
Yeah, 220. Then we had the cash proceeds. Cash proceeds on what? On disposal. Disposal of plant. So the cash proceeds on disposal of plant was how much?
Plant.
Yeah, go to the disposal account of the plant.
How
much did we pay?
1720.
We paid 1720. Then also we disposed a subsidiary, or we can talk about we disposed which company? Is it Simba or Kifaru?
Simba.
Which company did we dispose? Kifaru. Kifaru Limited, which was had an amount of how much? How much cash proceeds? Cash proceeds.
Kifaru, the one that we disposed.
Yes.
Kifaru, the subsidiary, the cash proceeds 5,300.
We disposed at
5,300.
Yeah, 5,300. So it will be 5,300 net of what? Net of cash disposed. The cash disposed was how much? The cash disposed, not 3.
The cash disposed.
Not 3.
The cash.
Cash and the cash equivalent was how much? 300. So therefore, it will be how much? 5,000. Then from there we go to the acquisition. Acquisition, we acquired what? Property, plant and what? Plant and equipment. How much was the property, plant and equipment?
Acquisition.
48 what?
4840.
4840. Next we had acquired subsidiary. Subsidiary which is Simba Limited. Simba Limited. How much?
Simba?
Yes, we acquired it for how much?
Is it 8,000?
The cash proceeds for Simba Limited was how much? Was 94. Purchase consideration. Then we can add if they had a bank overdraft, or if they had, we minus the cash. Let us go to note 2. Note 2, cash and cash equivalent of how much? Of 500. I don't know whether you are seeing that.
So the acquisition is the purchase consideration?
Yeah, the purchase consideration, the price that you paid. So 94 minus what? 500. So we are getting how much? 89. What else did we acquire other than these two? Did we acquire any investment in associates, or did we acquire any goodwill?
See, goodwill, we have goodwill. For the goodwill account, see, disposed. We acquired 2210.
We acquired 2210. That goodwill arised from the acquisition of what?
Of Kifar.
Yes. So therefore, we don't bring it here because already we have brought the price of that company that we acquired. Then from there, the property. What else? So give me the net investing what? Net investing cash flow. Net investing cash flow. Then from there we go to the financing. Financing activities what? Activities cash flows. Financing activities cash flows, and under financing activities cash flows, we have cash received. Cash received from what? From issue of shares. How much did we receive from issue of shares? It was somewhere.
Here it is 6,800.
Cash received from issue of shares.
Which one? The
This
net
one.
investing.
80.
6,800. Negative.
Yes.
6,800.
6,800. Negative. So this is our B. Then give me the cash received from issue of shares was around is it 2,300? Then we had cash received. Cash received from what?
You asking cash received from?
From bank loan.
Issue of shares.
Bank loan borrowed. How much was borrowed? Cash received from issue of bank loan. 625. Then we had the dividend what? Dividend paid. We start with the parent. The parent was how much? 1,380. And then we had the non-controlling what? Non-controlling interest. And for the non-controlling interest was how much? 485. Anything else? If there isn't, let us get the net what? Net financing what? Financing cash flow. And our net financing cash flow, which will be our C, is going to be how much? How much? It is 2,300 plus 625, then minus 1,380, then minus 485, and therefore you are having what? 1,060. Then we take cash and what? And the cash equivalent. Cash and cash equivalent, which is A plus B plus what? Plus C, which will be how much? It is 6175 minus 6800 plus 1060. So you will get 435. Then you add cash and what? And the cash equivalent, cash and cash equivalent, balance, cash and cash equivalent, balance what? Brought down, which was how much? How much was the balance brought down? How much was the balance brought down in this case?
The brought down was cash and cash equivalent. 875.
875. 875. Then from there they should reconcile with the cash and what? Cash and cash equivalent. Balance carried down, which was how much?
1310.
1310. When you add these two, are you getting 1310? Let us see, 435 plus what? 875. Yes, we are getting an amount of 13 what? 1310. We are getting an amount of 13 what? 1310. So that's how we are supposed to do that. That is how we are supposed to compute that.
Okay.